Thank you all for joining us on our webinar. It's a great pleasure to have the opportunity to present to you the most topical questions on the cutting edge of fintech regulation. In this mini-series, MiCA at a Glance, we are going to discuss one of the hottest subjects in the fintech scene, which is the markets in crypto assets regulation, or simply the MiCA regulation. Even though cryptocurrencies, as they have previously been called, were around since 2009, the debate on the classification and overall regulation of the industry started to take prominence only during 2017's crypto bull run. Then Bitcoin's price soared from $1,000 to almost $18,000. However, those who have been following the industry's changes as long as we have know that the most heated debate on crypto's regulation started with the SEC's lawsuit against Ripple. Nonetheless, while the US is figuring out the definitions of what is a security, the recent rollout of MiCA regulation is already setting a high global crypto legal certainty standard that is making the market participants re-evaluate the compliance of their activities. Though due to the breadth of the regulation, to effectively use the advantages of its legal certainty, it is necessary to have a robust structure and put things into perspective through practical examples. And that is exactly what we'll try to provide you within this mini-series. We'll start off by briefly recapping of how MiCA came into being in the first place, then provide you with a workable MiCA structure in terms of what it affects, and then dissect each part of the regulation separately. So today's discussions will be on the overall origins of the distributed ledger technology, the evolution of the crypto industry, and the main objectives of the MiCA regulation. Without any further ado, I'd like to introduce you to our MiCA expert Tautvydas, or Tavi, as he likes to be called to his international clients. He's a devoted crypto enthusiast, following the industry's development since the day one, and with the introduction of MiCA, still finding new things every day.
Well, thank you for that introduction. I'm very pleased to be a part of a crypto discussion, and I'm grateful for the opportunity to discuss the MiCA regulation with you.
A pleasure to have you, and I think we can jump into the discussion by having a bird's eye view on the regulation at large, so that we can have a better understanding of the points that should be discussed in more detail. So could you, Tavi, please give us an overview of the MiCA regulation and what it is all about?
Sure. So, as you quite rightly explained during the introduction, the MiCA regulation is a very important piece of legislation, and actually in more ways than one, as it's not just about the structured approach of regulating a global industry, but it's also what precedent that legal certainty creates and how it affects the entire financial market. However, to cover these points, I would like to start from the beginning, which is why was the regulation introduced in the first place and what are its general objectives?
Sounds great. Please tell us more about the background of the MiCA regulation.
Well, to begin with, it's important to understand the foundations of the technology which MiCA is intended to regulate. However, before that, I'd like to make a short disclaimer to our audience, just to make it clear that we're aware of the distributed ledger technology's developmental trivia preceding Bitcoin, like eCash, eGold, etc. But we choose Bitcoin to be the starting point, as it's the most tangible marker of crypto's inception, remaining crypto asset that still affects the crypto industry to this day. So, having said that, as most are likely aware, DLT and its most famous asset, Bitcoin, has materialized a response to the financial crisis of 2008, whereby Bitcoin's white paper identified financial intermediaries as the principal fault of the entire financial system, which, in its view, were considered to be generally untrustworthy. This is because the system relies on the information of centralized parties instead of the information being open for public verification. That is why Bitcoin's DLT, with a peer-to-peer transaction network, claimed to have solved these trust issues. Now, this narrative was coined on Bitcoin's Genesis block with its creators Satoshi Nakamoto's famous words. The Times, January 3rd, 2009. Chancellor on brink of second bailout for banks. So, Bitcoin was in essence created to remove financial intermediaries like banks from transactions that were believed to be the root cause of a financial crisis due to their negligence in financial activities and the subsequent strain on the financial system based on their bailouts. Following Bitcoin's decentralized narrative, a whole plethora of different cryptocurrencies cropped up, each supposedly solving some issues, while as a whole, the crypto industry started to exhibit its own inherent issues, especially as an effective platform for money laundering schemes and general scams exploiting consumers' lack of technical know-how. And all of this was happening regardless of the fact that most cryptos had a public ledger open for everyone's review. So, as the technology developed, the systemic problems developed with it, which gradually started to draw the attention of the regulators, and that's where we find ourselves today.
That's a great recap of crypto origins and evolution. Thank you, Tavi. You mentioned that the crypto industry somewhat demanded regulation due to the development of the DLT technology. Is it possible to put that development into some numbers so that we could have a better idea of how influential crypto has become on the global financial system?
It's actually an excellent question. And to be fair, crypto has experienced exponential growth, especially from 2017 until 2021, when it grew from 18 billion to 2.9 trillion US dollars. Now, the difference between these two numbers is simply immense, or if we want to be really specific, it's about 16,000%. So, in comparison, 18 billion is the size of the 120th largest GDP in the world, which is of Mozambique's. Now, Lithuania stands at place 79 with 70 billion, while 3 trillion US dollars is the sixth largest GDP of the United Kingdom. So it's a significant market to say the least. But not only that, it's estimated to continue growing to new all-time highs.
The numbers are truly impressive, especially considering that the total global GDP is 100 trillion. So it's simply incredible to think that an unregulated market supposedly teeming with scams and money laundering violations would attract so much investment. One can only imagine how much more investment this industry is going to attract with the proper regulation. That is most likely the primary reason why this industry is attracting so much attention. So it's not just about the technology, but also about the potential of crypto interoperability with the conventional financial system. But what about the actual regulation? How did the first attempts of crypto regulation look like?
Well, to be fair, the first attempts of crypto regulation were more reactionary rather than holistically coordinated kind. So, currently, in a very broad sense, national regulatory efforts extend only to the registration of certain crypto-related activities, such as crypto exchanges and wallet providers, which were incited by the last iteration of EU's AML directive. That is why this is the real revolutionary regulation, because not only does it provide a comprehensive set of requirements for the entire range of different crypto market actors, but it's also directly applicable across the entire union, which minimizes the risk of jurisdiction arbitrage. Likewise, a harmonized regulatory regime ensures the same level of service, consumer protection, and overall favorable business conditions due to the legal certainty. So, in essence, what the MiCA regulation aims to achieve is a highly coordinated regulatory regime that would both foster the development of the technology by stitching up its inherent risks through the requirements set on the different crypto market actors, while at the same time building a safe environment for investors and consumers.
Definitely. A stable regulatory regime with a harmonized application across the EU of 450 million people surely provides businesses with more investment security than an unsettled regulatory regime that requires its participants to constantly adapt their activities according to the whims of the regulators. That's why MiCA is capable of fostering a favorable business environment where companies could feel confident about making important long-term business investment into a EU with a stable regulatory foundation.
That's right. I mean, crypto regulation is definitely a step ahead, and maybe even for finance as a whole. Of course, time will tell, but for now, it's clear that implementing a regulation that has direct effect across the EU, involving the European Banking Authority, the European Securities Market Authority, and the local regulators, seems to indicate that crypto is here to stay for good.
Well, this was a very stimulating discussion. We've covered a lot of topics on the evolution of crypto and the things that led it to its regulation. I hope our audience found it as entertaining as we did, and it was a pleasure to have had this comprehensive discussion. Thank you for your time and tune into our next videos in this MiCA review mini series.
Thank you.